I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles, Twitter feed, and my website, gregschnell.com. Lots going on. A bit of a rough start here. Halloween has shown up a little bit early in October, but we're watching the market bounce off this 500 point, or the Dow dropped roughly 1,000 points in 3 days, and now we've bounced up about 50% of that. So let's keep looking at that. I'll show you the S&P here. We're right at kind of gap support from breaking down on Wednesday morning. And then the recession watch update. We'll just go through my recession charts now that we got the jobs number and all that kind of stuff. So some of these charts won't quite have updated, but the data rolls in from the government a little slow, and when it finally shows up on the chart, it's good to watch. And then I'm going to cover off an IPO review. And one of the things that we have, all of the hype around the IPOs, from Peloton to Uber to Lyft to Beyond Meats and all of those, were, how to play them. And I think one of the things, I would have sold Beyond Meat short at $100, and it's a good thing I'm not a short seller because it went all the way to 300, so that would have been a little bit of a squeeze. But again, it's even hard to short that kind of stuff, and the reason it's hard is because they're new, the float is limited, so even hard to borrow. Anyway, all of that adds up to how do we look at the IPOs? And one of the things I want to get you set up for is when the market starts to turn, how are we ready for it? And if all of a sudden these IPOs were basing and started to break out, how would we know? So we're going to be ready for that. So hopefully this will make you some money, serious money, in late 2019 and the start of the next decade, 2020. So let's get into the charts. Oh, one more thing. Greg is speaking at the Canadian Technician Day on October 19th. We've got both in person here in Calgary and online. And the CSTA.org, you can find the online deal for $35. And we got some really good speakers. Dwight Galusha, a friend of mine, will talk about scanning using StockCharts scans. Barry Powley will give a big market update. I'll be talking mostly about commodities on that day. We have Tom Boley on there. He's going to cover off earnings beats. And then we've got wrapping it up with Jeff Hirsch from the StockCharts Stock Traders Almanac. So lots of good speakers there. Hopefully for $35, that's I think outrageous value, and that's Canadian, so it would be even less in US dollars. Okay, let's get over to the charts and jump in here. Okay, quick update. So here we have this gap that we had on Wednesday morning as we thrust down here. This opening in here, we're now trying to get back through it on the intraday time frame. Not a big deal one way or the other to me. I think the big issue is from this 30-20 high that we couldn't get through, and basically we mentioned time and time again that the market just didn't seem to have enough power to push, and sure enough, here we are. This is a 10-minute chart. I mean, it's just trying to show you the intraday trend here. So we had that, and I think it's always good to remember that when CNBC is going to say we're down 1,000 points, that's almost like a number for the market to rally. And it's just because now you're outside of the standard deviation. And so all of the algo traders are going to say, hey, we're outside a 3-day move range. Now we're looking for a mean reversion trade, and they start to take it the other way. And literally it was within minutes. So always a good thing just to keep that in the back of your mind. You don't want to be getting short at the bottom of a down 1,000. You want to at least take short trades off for a bit. Okay, S&P 500, here we are on the daily chart, and you can see this 50-day moving average moving through here. We gapped below it. Now we're about to come and test it from below. And again, it's gently sloping down at this point, so this will be an interesting place to watch. PPO is still winding lower. We'll see if we've got any heartbeat by the end of the day and who wants to hold into the weekend. Looking at the weekly chart, you can see that we're pretty much smack dab in the middle of the range, but everything has rolled over. The full stochastics have rolled over and the PPO have rolled over. So far, to me, market sentiment is weak. So I have a chart list that I made up a few months ago, well, probably a year ago, just showing all of the different charts that I'd kind of be watching to see what's going on with the recession. And one of the things that I think will happen is the the charts will show the recession before we know that we're in a recession. And so by keeping track of the charts, we get two things. One is we see it coming sooner, and secondly, we'll see the bottom of it, and the market will go up long before the recession's over. So we need to be aware both sides, and the best way to find that is when institutions are changing their positions. So here we are with the earnings for the S&P 500, and we're outside the range of normal, but that's because interest rates are so low. And so here we've got a 10% or price earnings of 10, price earnings of 15, price earnings of 20, and we're sitting way up here, well above it. So at this point, not really thinking that the S&P is fairly valued by any stretch. So bit of a problem there. Now, consumer price index, the wage and clericals, this thing just keeps pushing up, and it's ticking down a little bit. This was from August. We'll get September's data shortly, but you can just see here momentum is relatively flat on that front. This is a giant uptrend. You can't get into the minutia, but the bottom line is earnings and wages continue to go up. And here's the 07-08 pullback. Doesn't look like anything here, but in general, this is always above zero all the way back into the 60s. So we continue to have positive momentum in earnings and wages. Here is the housing. What we see here is if this was going to roll over and start to go below this green line, that would be a bit of a problem, right? And we've had spikes down below it before, but we're right up near the highs here. And so if we started to get a reversal, that would be different. Or late December there, we were kind of pointing straight down, and we've turned and reverted higher. And the housing trade has been a pretty good one, DHI and tickers like that. So here's housing starts. This one is broken out to new highs. Again, this is an August number. Hard to argue with that, and it looks like we're bouncing. Looks like we're bouncing off the lows on momentum here, which is very positive, and we saw that all the way through the 90s and the early 2000s. So again, this is starting to look very rosy. Industrial production, even though manufacturing seems to be slow, this is still an August number. But what I'd be watching for here is this to start to turn down and get below its green line. And if I widen out that chart, the only thing it shows you is that this usually goes below its 20-month moving average near the market top. So that's important. Here's the banking index. And again, it continues to hold this line. We bounced off it, rallied back up, literally shot up like a bullet. Looks like we had lots of momentum. And what did we do? We immediately retraced. So we'll see how today closed, but we're at this point below the 40-week moving average. And so caution is still warranted. PPO rolling over right at zero. That's not good for me. One of the momentum indicators I like to watch. Here's MACD with a lot longer time frame, and you can say we're still in negative territory or barely positive. So nothing is strong at this point. And so if we're going to reverse, that would be great, but so far still need caution on the table. Airlines haven't done anything really for 6 years or 5 years from 2019 on, so not much going there. And here's the autos, and they're trying to hold on to this line, and with Tesla down 6% yesterday, it added to the candle. So nothing really helpful there. Railroads have broken their uptrend here, and the 40-week moving average is now above it. It's been all this week below it, and you can see momentum is going below zero. That happened in 2015, 2008. Those big pushes down are kind of problematic. So watching the railroads get this week, and they've broken the relative strength uptrend, to me, that's a clue that we got bigger problems ahead. Trucking tried to break out, ended up rolling right over, so no real help there. And here's the Dow Jones World Index, and we're just grinding sideways, trying to bounce off this 40-week moving average. At least it's still upsloping, but you can see momentum is not. Momentum is going the other way. So we've got this upsloping moving average, but we've got a downsloping momentum. So at this point, it looks pretty weak. And this is what we call a kiss and go, where it comes up to try and cross the line, fails. And this is more of a confirmation of direction. So this is saying, yeah, I am weaker. Until we get any other tone from the market, we still have to be defensive because everything is all of this momentum is pointing down so far. The 3-month really big picture here, these major tops usually coincided with the market tops, right? This was early 2007 and it was late 2007 that we had the problem. This happened more in July for us, and now we're still tracking lower, but I note these calm before the storm lines here. All of a sudden when it starts to shake, that's the bigger deal. This is the 3-month compared to the 10-year, and I've put the recessions on here in dark shading, and we've pulled down pretty hard. This looks like a recession to me, but you can see we did this in 94, 95, and we did not have one. So anyway, it's looking more ominous here on this chart, and the 3-month is just literally flown down. I haven't updated my Nikkei, all of the buying from the Bank of Japan. Got to go back and grab that data. It doesn't take very long, but we're sitting right on the 200-day moving average for the Nikkei, so just flat. And look at that thing; it's literally straight across the page. No momentum either way. Big picture on the Nikkei, trying to hover around this 21,000 level. Momentum got back above zero slightly, which was another reason I was starting to get bullish. Hey, if this is all going to break out, then let's get on board. Immediately rolled over. So a bit of a problem, but we can see the 40-week moving average trying to turn up here, which is at least something positive to look at. The New York Composite trying to hold the 40-week moving average momentum, same thing, the kiss and go here. So that's a bit of a problem. Looking at the Russell small caps, this is lower highs here. That's a bit of a problem. Anyway, momentum rolled over below zero. To me, that's a big issue. So worried about that. Semiconductors, I think, have performed admirably this week. They're actually higher than last week's close. So in light of the whole market falling down by 1,000, there's some optimism showing up in semis. And I think that's related to China trade. So that's why I'm not too pessimistic, or I'd like to be more optimistic that something good is going to happen. The S&P bounced off its 40-week moving average, which is similar to the 200, but not exact, right? Anyway, we bounced right off that level, and now we're back mid-range. But, we did quite a bit of damage technically by coming down. We made new one-month lows and wiped out September's gains early on. Now we're back rallying up here, trying to see if we can retrace some of that. Again, we're about 50% of the way back up. But the PPO on that is pointed straight down, so that's a problem. Here is the spreads between the 10-year and the 2-year, and you can see we're down in the bottom right-hand corner here and dipping. This chart, I've got to zoom in on the last little bit here on the next chart. What we see on this chart here is this spread is trying to rally off this gap. But what happens is when this actually starts to take off way up here, that's actually when the overall market starts to fall. So these big spikes up, that's more of a concern for us. And it keeps track of these spreads between these different interest rates. I'm just going to speed through those. There's no real data here, but what we were looking for here is a break in this big downward trend line, and this starts to spike up, and you can see it had a pretty good move this week. I would really need to start to see that repetitively move up in order to think we're starting to drop very quickly. You can see on the 30 minus the 10, this one here was the 30 minus 10 shown slightly different. This is whatever 10 years, and this is 40 years, but most of these big trend line breaks are important, but it's when it actually starts to spike that it matters. And so we see this spike here recently. It would have to literally start gapping up to really start to change momentum. This is the 30-year minus the 3-month, and you can see it's still tapered down here, so no real change. But in 2007, that was a pretty good clue. This was one of the first things to go ballistic. Same in 2001, so watching that one. 3-month versus the 10-year. So these are just different charts. You can go back and replay the tape, but we're, retracing from a very high level here, and all of these, if you line up the dates, they were pretty important. So it doesn't say we're out of danger. It just says that all of the signals haven't started to kick in as a group yet. I just want to get down to, here's the broker dealers with everybody jumping on free commissions here. This chart is breaking down, but it also is pretty weak to begin with, but it is making lower lows after making higher highs. So indecision without a question here. We've got lower low, lower low, higher high, higher high. It's having trouble, but it rolled over right at zero and is starting to go down. That's usually an early indicator group. Money supply, I just want to keep track of above 0.75, and it's trying. And the consumer confidence indicator here is coming up. Personal consumption, this is just fine and no damage here on the PPO. Unemployment claims shown inverted, so this continues when it's rising. It's just like the stock market rising. Everything still looks fine here. We're testing this moving average, but nothing bad. And University of Michigan sentiment had dipped below. This was as of September 1st. So we're starting to see the breakdowns here. We're right at zero, so we don't want to see this one go negative. But anyway, okay, with that, we're going to go to a quick commercial. And when we come back, I'm going to cover off the IPO. So hang with me.
The Chart Watchers newsletter features expert technical commentary about the current market from some of the industry's leading technical analysts. See what's really happening in the markets through their eyes and gain an edge in your own investing. The newsletter is packed full of insightful and educational articles intended to help you become a better investor. Whether you are brand new to charting or a seasoned technical analyst, each edition will provide a wealth of informative content. It's the best way to stay informed on all the latest news, events, updates, and additions here at StockCharts.com. Whether it's a new feature or blog, an upcoming conference, or a special sale, you'll hear it first in the Chart Watchers newsletter.
We're back, and now we're going to cover off the IPOs that I mentioned earlier on in the agenda. What I want to do is, a lot of people get all caught up on these IPOs, and I need to be a part of them. And these charts, I think, will convince you differently. I have sorted these charts based on volume traded. And the reason to do that was just to pick some level of a method of sorting. You can't really use moving averages. A lot of them don't have one yet. Scooter rankings, because they just started, they don't have one. So lots of issues here, but let's just quickly jump into the charts. I want to spend a few minutes rolling through and give you some ideas here. Here is the work Slack Technologies IPO. IPO'd up here around $40. It's trading, 21, so 50% off. Always try and look for something that's 50% off. These are starting to improve. This is a daily chart. I'm going to give you some tools to try and look for them on a weekly chart, but we should see this relative strength downtrend break, and it should start to outperform. And when it does, that's something you want to be on board for. Here's Uber, and you can just see grinding lower. Hasn't really given us anything, but if this was to start to turn up here, you'd have positive divergence. Anyway, we'll wait for the overall market to improve. But here's Peloton, IPO's at 27, we're trading at 22, trying to bounce off the bottom. Same for Lyft. All of these things, what you'll find is they're living in the bottom right-hand corner. Pinterest has been falling for about 6 weeks now. Even if you just drew a gentle line across this PPO, it would give you an idea that perhaps we could start looking at that. This is a longer term for Pinterest, and we've just been chopping, but there does appear to be support around here at 25. So if a person wants to start putting on a trade because this is turning up, then you would just put your stop below 25 and say, as long as we stay above here, I'm interested. It's better than putting your stop at 25 when you're up here at 36 trying to buy a breakout and it fails. So this is not a bad entry here. But again, you have to watch it really closely if you want to play it like that. I'm playing on a weekly chart. This is daily, so for me, it wouldn't be an entry yet. Anyway, what you see on all of these charts is this trend down, and you don't really have to rush into these IPOs, and even the ones that you would have liked to have got in Beyond Meat, as I mentioned earlier, I wouldn't be able to hold it. So here's Zoom Video, and it's grinding lower. No real reason to start picking that one up yet. The long trend line and momentum here, if that starts to break, perhaps. But looking, again, these are the highest volume ones, just when I ran the sort this morning. And here's Real, and it has bounced now and has turned up. So that's important. Anyway, all of these charts, when I go through them, they're all ugly. And so we want to wait for this group to turn. How do we do that? And so let's jump into that. One of the things we could do is we can create a chart list of IPOs, and we have to basically go find them through the internet and search through all of the company listings. There's probably a website out there, IPO.com or something, that'll list off all of the new IPOs for the year. But with all of that data, what we need to do is we want to start watching for something turning up. And here is just something simple, a weekly full stochastic starting to turn up here. So it's crossing the 20. Let me just go get a chart and show you what that might mean. So here's the COPEX. So you have a full stochastic coming down here and it starts to turn up. Well, that might work, but again, they can fail again, and it turned up and failed again, turned up. You can either wait for it to just turn up above 20. When they go above 50, usually that is a better long-term indicator. So something as simple as just taking a weekly chart. But again, here the big downtrend was breaking and started to turn up, and we see the same thing in momentum. This was making a long downward wave. There's false breakouts in there. I get it, lots of trouble, but starting to turn up. And when it did, not a bad place to catch it, right? This was a 30% move or something. So you want to pick something, either a PPO turning up or crossing above a moving average or a full stochastic turning up. All depends on how early you want to be. But the point I will make is you run this simple scan. And if I run it today, so if I just hit run scan, I get nothing. And that's been that way for a while. And here's 60 trading days ago, there was one stock that kicked it out. So at least the scan works. But the problem we have, obviously, is we'd need to run the scan every day. So let's set it up as an alert. And what we've done, so we have this chart list that we made up, right, called IPOs. And from here, we can go to summary mode, and you'll just see I've got 113 charts in here or something, but it's a pretty long list. What we'd like to know is when these charts all start to turn up. So we're going to set an alert, and the idea behind the alert is to go to my favorites list number 54. Now, how do I know it's number 54? You go down here to chart lists, and I just happen to have way too many chart lists. I have 450 or something. But one of the options, here's a list called 5G. One of the options is called IPO that I've made, and I just keep adding charts to it. So I went in this morning and refreshed the list and put a whole bunch of new names. I might have missed a few, but I got most of them. And the bottom line is I want to make sure that when these start to turn up, I'm awake and ready to pick them up. So we make a simple scan code here. Look on my favorites list of IPOs and a weekly full stochastic turning above 20, and that was what I just showed you, that bottom line on this COPEX chart. So we want to look when this starts to turn up above 20. At least it's going to bring it to our attention, and we can make some decisions there. Okay, so we run the scan. Let's go here. So we run this scan, very simple. As it turns up, it's going to give us some answers. And so in this case, it tells us there's no results right now. And if it was going to start to turn, how would we do that? Well, we're going to run this alert workbench. And on the alert, it's at market close. You could do it at market open. You could do it all day. I kind of want a summary of them. So either at market open or at market close is a little bit better. Turning above zero, send me an email and keep going with this alert. So just because you sent me something doesn't turn it off. Okay, that's under the advanced alert tab. So whatever you would have run in the scan code, you just move it over and run it into alert, and this will run it automatically. So what does that mean for you? How does that physically help? Okay, let's go to, this is pretty exciting, I think. So I get this, can you tell? I get this email every morning, and in this case, whatever, it's a weekly PPO turning up USA. This is every stock that has the momentum on a weekly chart turning up in the US. And you can see this is October 2nd. And Tapestry was the only chart this week that has been turning up. And obviously yesterday we had a bit of a rally. Still wasn't enough to get us more names turned up. It's pretty weak out there. And so what we want to keep watching for is a group. And here's an example. We know that roughly end of August, start of September, the market started to turn up. Well, look what happened on my alert scan. All of a sudden, like, we went from zero to, this huge list of stocks, and they're just sorted alphabetically. There's no magic to them. But, here's, so Zion down here, all the way in here. And just in general, right, you can go back and look. First of all, you can go through your emails and just say, okay, when did the market actually start to turn and what should I look for? This is not hard. It's going to send you one every day, but the list isn't complete until the end of Friday. what turned up last week. And so I could just literally go back through my emails, look and see every stock that had a positive turn on the PPO. And if I want, I can just click on those, put them in a chart list. I can do whatever I want. Take that group and just go check them out and see if they are what I like. Is momentum actually improving, or is this just a turn up on a wave down? Nothing really going on. It can really, really help you. So just seeing the difference between 1 and 100 starting to show up, and this list maxed out at 100. So all of a sudden you see 100 charts starting to turn at the same time. That's not just a one-day wonder. Like, we had a pretty good day yesterday. We're up again today. This thing isn't firing off any signals yet. So everything is in still downward mode. We still have an S&P 500 with the PPO rolling over. And again, this list that I went and got was back on September the 6th. If you go look at the stock market on that day, okay, let's just go get S&P 500. Okay, so here's September. So we had the August low. The next week, literally, it started to turn up, and my PPO started to improve right in here. And it's not crossing, it's not asking for it to cross the signal line, just for it to turn up, I think. Let me go see what I did right for the scan code. Oh, this was weekly full stochastics. But I think on my PPO, it actually does have to cross the signal line. The other way to do it is say I want my PPO to be higher than 2 weeks ago or something like that, and that'll help find turns for you. But in general, what we want to see is this thrust where all of a sudden all these IPOs start to turn up. And that's probably going to mark a more significant bottom and a more tradable bottom that will help you get into the big picture on a rise out of here. So from all of these charts that are falling today, and literally they just keep grinding lower, I think that, the better way to play it is waiting for this whole group to start going green. So even though the market is up today, this Castle Biosciences is leading the group, but we have just as many down as up. And, it's not really kind of what we want. But if we're going to start to see all of the turn thrust and all of these big names that we've just had come out start to work, that's going to be very positive. So I want to stay in tune with that change. And if that change is going to happen, just something simple like this alert workbench. And by the way, if the answer is 0, it won't send you one. So it doesn't fill your email basket with no information. It only sends it when there's a change and there's an actual positive recording. I think that's pretty powerful. I think, best way to make money is getting ready to make money. And when this starts to turn up, just have your chart list set up, know what you want to find. If Peloton is the chart you want, or Uber or Lyft or whatever, these charts are all going to flip for you and make you some money. Okay, real quick, we have China trade coming next week. We have earnings coming next week. And one of the things we want to watch for, notice this slow little pullback here on the PPO. This could easily turn higher. This is the copper chart. And I think this is one of the places to look for results. The bank charts could probably turn up. And the other thing to look for is on this oil chart. Again, we want to keep watching. This thing is testing its lows. This is XOP, and I'm fine with that. The big thing I think here, real quick, is when this trend line starts to break, I want to be more interested. Okay. Thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific on StockCharts TV. You can also catch replays on the StockCharts YouTube channel. Please go to gregschnell.com and register to get my newsletter. I'm very close to sending that out. Thank you very much.